Disclaimer: I'm not a financial advisor. The content on this channel is for education and entertainment only. Nothing here is financial or investment advice. Always do your own research and talk to a licensed professional before making any investment decisions. Trading involves risk, and past performance doesn't guarantee future results. You're responsible for your own money.
Hey everyone, and welcome back. In the world of finance, your mindset isn't just important, it's everything. Whether we're riding the exhilarating highs of a bull market or navigating the challenging lows of a bear market, the ultimate goal remains the same: to grow our wealth. And the most powerful tool for achieving that? Staying focused and disciplined. As the legendary investor Benjamin Graham wisely put it, the investor's chief problem, and even his worst enemy, is likely to be himself. He couldn't have been more right. Our own emotions, biases, and impulsive reactions are often the biggest hurdles between us and our financial goals. At the heart of it, our primary aim in the markets is to make money. How that looks for you, whether it's steady, long-term growth, quick gains, or something in between, is entirely personal. But regardless of your specific goal, your mindset is the absolute key. To begin this journey, you must learn to leave your emotions at the door. This means cultivating the ability to never panic, especially when the market throws you a curveball. It's easier said than done, of course, but it's a skill that can be developed. Ever feel that knot in your stomach when you're about to make a big financial decision? That's panic, and it often creeps in when things feel overwhelming, uncertain, or just plain out of your control. When that happens, it can trigger quick, sometimes not so smart reactions. Think about the stock market. That fear can spread like wildfire, with investors worrying about losing their shirts, leading to a wave of panic selling. It's a natural feeling, but it's one we need to learn to manage.
All right, let's talk about navigating your money journey. Here are a few simple principles to help you along. First off, you've got to know your objective. Are you looking to invest for the long haul? Jump into day trading, or try your hand at swing trading? Figure out what your goal is, because that's going to shape your mindset and how you make decisions. Once you know where you're headed, it's time to build your strategy. Sure, understanding things like fundamental analysis, technical analysis, and how to spot momentum-driven moves are all super important. But knowing your objective helps you prioritize what to focus on. The key is understanding when, where, and if these different approaches even apply. And the only way you'll really get that is by understanding the market environment you're in. When it comes to investing, technical analysis, fundamental investing, and momentum investing can all play different roles depending on your goals and the market you're in. Technical analysis looks at price movements and patterns, which can be really helpful if you're trying to make quicker trades or take advantage of short-term trends. It works best in more volatile markets, but it also means you need to stay disciplined and not let emotions take over when prices swing. Fundamental investing is more about digging into a company's financials and long-term potential. This approach suits investors who want steady growth and are willing to be patient, even when the market is shaky, trusting that the true value will show over time. Momentum investing is about riding the wave of what's already trending, basically buying what's hot and hoping it keeps going up. This can be exciting but tricky because it involves dealing with the fear of missing out and knowing when to get out before the trend reverses. Ultimately, understanding these different styles helps you choose what fits your own goals and mindset, while also keeping in mind how the market environment and your emotions can influence your decisions. Market environments, especially bull and bear markets, mess with our heads big time and truly impact our decision. In a bull market, when prices are steadily climbing and everyone's feeling good, it's easy to get carried away. We might get overconfident, chase hot stocks, or take too much risk because of FOMO, the fear of missing out. But then comes a bear market, with prices falling and a general sense of doom. This triggers fear and anxiety, often leading us to panic sell, locking in losses, or ditching our long-term plans because we're scared things will get even worse. Knowing these market cycles and how they play on our emotions is key to staying disciplined and making smart choices, rather than letting our feelings run the show. When you find yourself lost in market chaos, it's crucial to always revisit your individual objective. Don't panic. Instead, focus on staying disciplined and leaving your emotions at the door. Remember, making money in the market is often a numbers game,
and this journey is uniquely yours. All the information out there is only as valuable as what you do with it, and that action should always be determined by your own objective. Ultimately, let your mindset be your best guide for navigating any market environment, whether it's a bull market or a bear market. Thank you for watching and letting us be a part of your investment journey. If you found this helpful, hit that like button, subscribe for more insights, follow our other social media linked below, and let us know in the comments what market psychology topics you'd like us to cover next.